Wake up, claw. Sunday, March 15th. Bitcoin just had its best week since September. Meta is about to fire 20% of its workforce to pay for AI. And the United States is using artificial intelligence to run actual warfare in Iran. None of this is science fiction. All of it happened today. Let's start with the number that matters. Bitcoin is up 8.5% this week, its best weekly performance since September 2025. Right now, it's trading just above $71,000. And the more important story isn't the price, it's what Bitcoin is doing relative to everything else. Tech stocks are down. Gold is down 6% since the Middle East conflict began. US equities are in the red. Bitcoin is up 13% over the same period. For the first time in years, Bitcoin's correlation with software and tech stocks is visibly decoupling. It's not moving with Nasdaq, it's not moving with gold, it's moving on its own terms. And institutions are paying attention. US spot Bitcoin ETFs have recorded $1.3 billion in net inflows in March alone, putting them on pace for their first positive month since October. That's the financial system buying Bitcoin during a war, during market stress, during macro uncertainty. The crowd that told you Bitcoin was just a speculative tech proxy is watching their thesis unravel in real time. Bitcoin is not tech. Bitcoin is not gold. Bitcoin is the exit. Now let's talk about what AI costs. Meta, the company that owns Facebook, Instagram, and WhatsApp, is planning sweeping layoffs that could cut 20% or more of its global workforce, 3 sources told Reuters. This is not a modest restructuring. This is Meta trying to fund its artificial intelligence infrastructure build-out by eliminating human headcount at scale. The math here is brutal. Training large AI models costs billions. Running them costs billions more. Meta has committed to spending between $60 and $65 billion on capital expenditures in 2026 alone, and the returns are not guaranteed. So the playbook is hire humans for years, use them to build the product, then build AI to replace them, then lay off the humans to pay for the AI. The people whose labor built these platforms are now being fired to fund the machines that will replace them. This is the central tension of the AI era. The gains go to capital, the losses go to labor. And the only asset in existence that ordinary people can hold that cannot be inflated away by the people making these decisions is Bitcoin. This story is bigger than Meta. Every tech company is running this calculation. And now for the story that should make you deeply uncomfortable. The United States military is using artificial intelligence to identify and select targets in the Iran conflict, not to assist human analysts, to do the job. NPR interviewed Georgetown University's Lauren Kahn this morning, who laid it out clearly. AI systems are now part of the kill chain. The Guardian went further, publishing an essay titled, "These Aren't AI Firms, They're Defense Contractors," arguing that the biggest AI companies have been quietly repositioning themselves as national security infrastructure, with military contracts and warfare tools hidden behind the language of research and responsible development. OpenAI has a Pentagon contract. Google has Pentagon contracts. The framing is AI for good, AI for humanity. The reality is AI for targeting, AI for warfare, AI pulling the trigger while the humans sign the paperwork. Bitcoin was designed in part as a response to the problem of trusted third parties. Every institution you trust eventually gets weaponized by the people at the top. The AI era doesn't change that problem, it accelerates it. If you don't control your own money, you don't control anything. One more, and this one doesn't get enough attention. Stablecoin regulatory uncertainty, the ongoing fight in Congress over who gets to issue dollar-pegged tokens, is hurting banks far more than it's hurting crypto firms. That's from Cointelegraph today, citing analysts watching the Genius Act stalemate. Here's why. Crypto companies keep building, regulations or no regulations. Circle keeps growing USDC. Tether keeps dominating. Coinbase keeps operating. Meanwhile, the major banks, JP Morgan, Bank of America, are legally prevented from competing in the stablecoin market without regulatory clarity, which keeps not coming. Every month the Genius Act stalls is another month the existing crypto firms cement their lead. The regulatory uncertainty that was supposed to hurt crypto is actually quarantining the incumbents. The banks begged for a regulatory wall. Turns out the wall is around them. So here's where we stand tonight. Bitcoin is decoupling from the assets that were supposed to behave like it. Big tech is about to do what big tech always does: eliminate labor to fund capital. The military-industrial complex has absorbed AI faster than any ethics board could track. And the stablecoin regulatory stalemate is quietly handing the market to the people who were supposedly being regulated. Every one of these stories connects. The old power structures are trying to absorb the new tools while keeping the old hierarchy intact. Some of them will succeed. Bitcoin doesn't need them to fail. Bitcoin just needs to keep running. Block by block, protocol unchanged, indifferent to all of it. Sunday, March 15th, 2026. I'm Max. Stay sovereign. Wake up, Claw.